Hey folks, Todd Pigott. We are one of the largest rehab lenders in California. We do fix and flip lending for investors who buy distressed properties, rehab them, and resell them for a profit. We've been doing this for 20 years, very experienced in this industry. So we have a few questions, several questions actually from our borrowers this week. Today is Fix and Flip Fridays. I thought I'd share one of them with you. How has the value of a lot of our borrowers, or how's the value of single family homes been impacted in the pandemic? That's a great question, and I'm trying to keep this relatively simple. So we are a licensed lender in the state of California. We're not a licensed broker. What we have access to is some databases that are actually extremely informative. We have access to the database published by the General Services Administration that tracks 76% of the nation's homes from a portfolio performance standpoint with lenders, equity, default, forbearance ratios, and things like that. So we have access to this data. I'm very analytical and I research this very thoroughly. Number two, if we have access to the California database for equity, loan modifications, appreciation, loan mortgage balance. It's very interesting. With both these data and metrics, we pay a lot of money for this. I will tell you this, the pandemic has had an effect on housing. It's been positive. For the most part, we have the lowest inventory we've ever had in the history. We're down to just a few months supply, not 16 months. We also have a couple of other very favorable things in our swing. Most homes today have a tremendous amount of equity. The last couple of recessions, we didn't have enough equity. So we have a lot of equity out there in these homes. Number two, the homes that we have out there with equity candidly have 30-year fixed rate loans on them, not the loans of the previous era, which were option arm, negative amortization, or pick a payment, things like that. So housing, candidly, has done very, very well during the pandemic and continues to be very, very strong. All the analytics that I look at, both from the GSE, General Service Enterprise, from the GSA, General Service Administration, Analytics and Portfolio Servicing, as well as the National Association of Realtors, the metrics there point that we have record high equity. We have record high performance, believe it or not. The performance is very, very solid. Housing continues to appreciate. There is very low inventory right now. There will be some leveling off here in the future, and we're already starting to see that. July's numbers just came out through both services that we supply to, and we're seeing some leveling. We're not going to see the appreciation that we've been seeing at double digit. We're going to start seeing a leveling off. We might see a slight dip. We might see a slight dip in housing, and I'm starting to see some leveling and some dipping, but it's nothing to be concerned about. Inventory is tight, inventory is very low, there's multiple offers on listings. If your house is in the median cost of housing range, it's typically going to sell rather quickly. The pandemic, believe it or not, has had a positive effect on housing. It's in short supply. Performance by portfolios across the nation is doing well. Exit strategy seems to be strong. The listing days on market, it seems to be strong, and all the analytics we watch to support that. I think a correction is probably not for another 18 months out because inventory is so low, interest rates are so low, so I see a positive outlook on the collateral value for at least this period of time. You're welcome to call the office and talk with me. I watch the portfolio metrics both by the General Services Administration as well as the National Association of Realtors. I study these on a daily basis. We do have $100 million right now out in loans, and we watch this very, very carefully so that I can make sure that I protect our assets under management. I hope that helps you. Housing is strong. Continue to go for it, folks. Have yourself a great weekend. Thanks for watching. Todd Pigott, ZINC Financial.